Okay. Including my own children. Gosh, it's just, ugh. And they wonder why they don't understand it. I never thought I'd have to teach somebody how to take notes, but apparently it's a skill that is acquired. Doesn't come innately. Okay, so education credits. Two main education credits. Oh, two education credits these days. One is the American Opportunity Tax Credit. The other is called the Lifetime Learning Credit. You cannot take both credits for the same education expenses. It could be one or the other. The American Opportunity Credit is a more generous credit. It has a refundable portion and a non-refundable portion to it. But the requirements for qualifying for it are more stringent as well. So the American Opportunity Tax Credit can include, so qualifying expenses would be those tuition fees, does not include room and board. Tuition fees, books, supplies. The books and supplies do not have to be purchased from the institution, and they do not have to be required as a part of enrollment. Like they don't have to, like this class, you guys paid for the book in the fee, right? It was required. I mean, you had to pay for it to get. I think there was maybe an option to opt out, but it's not worth opting out. But so that's paid to, and I say that because when we talk about the lifetime learning credit, we have a difference between the American Opportunity Credit as far as which books qualify, okay? So just kind of stick that in your head. The fact that in this class you were required to purchase the book as a condition of attendance. But the American Opportunity Credit, that's not a requirement. So you can purchase other types of school supplies and have it count as well. Even laptop computers and stuff like that, those types of supplies would count for the American Opportunity Tax Credit. So it's pretty expansive, doesn't though include room and board. It is only applicable for the first 4 years of post-secondary education. So essentially, your bachelor's degree. Doesn't have to be for a bachelor's degree necessarily. You could get 2 associate's degrees. You could take 2 years at DMAC and count those toward the American Opportunity Tax Credit. Go to work for 10 years, come back to school for the next 10 years. There's 2 more years of post-secondary education. And you would get the American Opportunity Tax Credit for those 2 years. But it can't be more than 2 years. You can only take it for, you can't be more than 4 years total. You can't take it for more than 4 years. It's intended for undergraduate degrees. Okay? What else do I want to say about the American Opportunity Tax Credit? Like I said, it's more generous. It's a larger credit than the Lifetime Learning Credit, but it has more stringent restrictions. Let's look at this chart down here. Student may be pursuing an undergraduate degree or other recognized education credential. So it doesn't necessarily have to be for a degree, but if you're getting certification for something, that can count. You have to be enrolled at least half-time for at least 1 academic period during the year. So at least half-time for fall semester, at least half-time for summer term, that sort of thing. I already talked about what is included. You cannot have a felony drug conviction on your record. You can have a felony murder conviction, but you can't have a felony drug conviction on your record to take the American Opportunity Tax Credit. I get that goes back to just say no, probably back to the Reagan. Well, this was instituted during Bill Clinton's presidency. So I don't know where that why they've singled out drug convictions somehow. It is a total, you can get up to $2,500 credit per eligible student. So if you have 3 students who all qualify, they're your dependents, 3 students that all qualify for the American Opportunity Tax Credit, you can get up to $7,500. It is not limited to per tax return. It's limited to per student. So, how does this credit work? You take the first $2,000 of expenses, you get a dollar for dollar credit. The next, or I should say next, because there's not a third. You get 25% of the next 2,000. So how does that work? So if you have, let's say we've got 2,500 in expenses. Well, that means 2,000. Gonna get us a $2,000 credit. That 500, and 25%, was that $125?
Yeah.
Total credit is $2,125. Okay, so you kind of have to break up the 2,000s, right? Now, what if you have 10,000? Well, the first 2,000 credit. The next 2,000, 500, and then we stop. We don't get the rest, the other 6,000 don't count toward it, right? So that's why it's maxed out at 2,500. Up to 40% of it may be a refundable credit. You'll see, I'll show you the form that we prepare it on, and you'll see how that calculation is done between the refundable portion and the non-refundable portion. Okay? That's the American Opportunity Credit. One thing I wanted to say, so if, and this applies to both credits. So who gets the credit? You have, there are a lot of situations where children, you've got dependent children who are going to school, and those dependent children may have a job and they may be required to also file a tax return, but they're still dependents on your tax return. The credit is applicable, the credit is used by the individual who files, what do I want to say? The taxpayer, the parent. I'm getting this mixed up. Sorry. So if the child is a dependent on the tax return, the parent gets the credit, regardless of who pays it. Even if Aunt Edna paid it, the parent gets the credit. If the child is not a dependent on the tax return, then if they're not a dependent on any tax return, the child can get the credit if they paid it. So they have to pay it in order to get that credit. But if they're still a dependent, then the parents are gonna get the credit even if the child pays it. That makes sense? I screwed that up a bit. Okay? So like I said, and if Aunt Edna pays it, somebody else pays it, the child is deemed to have paid it, but if that child is still a dependent on their parents' return, the parents get the credit, even if Aunt Edna paid the expenses. Make sense? All right. Lifetime learning credit. So, again, this is only for the first 4 years. What happens if you take some classes after the first 4 years? What about graduate school? What about classes that you just take for fun? What about classes that you want to, I don't know, you're trying to train for a new profession, but you've already had 4 years of college. So the lifetime learning credit is available, but it is available on a per tax return basis. I know they say per taxpayer there, but taxpayer is return. The maximum amount of the credit is $2,000. Essentially, the maximum amount of qualified expenses is $10,000, and it's a 20% credit. It is non-refundable. None of it is refundable. You do not need to be pursuing a degree. You don't have to be at least half-time. You just need to be enrolled in and spending money in some sort of post-secondary institution. And the post-secondary institutions that would qualify are the same ones that would qualify under the student loan interest deduction. So if they are eligible to give out financial aid, they're an eligible institution. Most institutions in this country are. Even the private, even the for-profit ones, most of them are. You don't have to be pursuing any type of credential. Now, this is where the difference is. Qualified tuition and related expenses include course-related books and supplies, but only if the amount was required to be paid to the institution as part of the enrollment and attendance. This class, you paid it directly to DMAC. It was included in your tuition. It was just all rolled up into one. So, therefore, even if you took the lifetime learning credit, that expense, the book expense, would be included for your purposes. Now, in the olden days, we didn't do it that way. The olden days, last year, we didn't do it that way. Students purchased the books separately. And so they could go to the bookstore and get it. They could go to Textbook Outlook and get it. They could order it from Amazon. It was purchased separately, so it wasn't paid to the institution. Was it required as part of enrollment? No, it wasn't required, but you're not going to pass the class if you don't get it, right? But it's still not a requirement. You can have a felony drug conviction. So you might be in your first 4 years over here, qualify in every other way, but you've got a felony drug conviction. You can still take the lifetime learning credit though. So you're not completely left out. Can you imagine? So think about this. If you're a tax preparer and a client comes in and says, hey, my son is a sophomore at Iowa State, here are their expenses, or a freshman, first year. And you have to ask them, well, has your son ever had a felony drug conviction? You could actually look that up in Iowa courts online, as long as it was in Iowa. I'm sure other states have it too. But to then have to tell them, I'm sorry, you can't take the American Opportunity Credit, but I can give you the lifetime learning credit instead. So what about borrowed funds? So you took out a student loan to pay for your schooling. That still counts. You can still count that money toward the credit, even though it's not your money. You borrowed for it. You're gonna have to pay it back eventually, maybe. But it's essentially, your money. You're just borrowing for it. So that doesn't stop you. Even if you borrowed for it, you can still claim that same money toward the credit. Let's see if there's anything else I want to say. Questions about this so far? There's a phase out. Yeah, I gotta talk about the phase out. Okay. So you got this credit. Everything's great. Now you gotta figure out if you qualify for it otherwise, but we've gotta see what your modified adjusted gross income is to determine if it's limited, if the amount of credit is limited. So, how do we do this? We've seen these formulas before, or equations before. So for married or single, and this applies to either credit, which is really nice because it used to be they had 2 different phase outs for the credits. It was ridiculous. It was really kind of dumb because they were really close to each other, but they weren't exactly. But now it's the same phase out. So for either one of these, married taxpayers, $180,000 is what we're going to use. $90,000 for single. So the phase out range is the denominator in these fractions. So between $180,000 and $160,000, the credit starts to phase out. Under $160,000, you get 100% of whatever the calculated credit was. Over $180,000 for married filing jointly, you get none of the credit. Now this is our modified AGI. The modified part means you've got to add back any foreign earned income that wasn't already included in income, that had been excluded, but now you've got to add it back. All right, so let's look at this example here. We've got Quinn and Andy, married filing jointly, so we're going to use the equation on the left. Modified AGI 164. Pre-limitation lifetime learning credit is $1,200. So the first thing you have to do is calculate what the credit is, right? Using the examples that I gave you up here. Figure out what that credit is. So if it's lifetime learning credit, I'm going to take the tuition times 20%, the tuition up to $10,000, times 20%, that's our pre-limitation credit. American Opportunity Credit, first 2,000 is dollar for dollar, next 2,000 is 25%. We're going to use that result. That's our pre-limitation credit. So in this case, their pre-limitation credit is $1,200. So we would take the 180 minus their modified AGI, divide that by 20,000. So what do we get here? 16 divided by 20. Okay. 10, 8, 4, 5, 4/5, which is what, 80%? Did that in my head.
Yes.
So 80%, and then we're going to multiply that result. So this is the proportion that they get to claim of that credit. Then we're going to multiply it by the pre-credit, or the pre-limitation credit, which is, somebody help me out here. So it's 8960. That's the amount of credit they get. So we can do a different one if they were single. Let's say they're single. And their modified adjusted gross income is 86,000. So 90 minus 86 divided by 10. All right, so now we've got 4 divided by 10, 40%, 0.4 times, we'll use the same 1,200. So 450, 480.
Yep.
480 credit. Questions? No? Geez, I must be doing a great job today. Form. This is the 8863. All right. So, if you're using the American, if you're taking the American Opportunity Credit, you would have to fill out both Part 1 and Part 2. You also have to fill out the second page, which gives you information about the student. This is information to determine, do you actually qualify So, American Opportunity Credit, Part 1 and Part 2. Lifetime Learning Credit, only Part 2, because that's the non-refundable credit. So, here, so enter 180 if very filing jointly, we'll use this information here. So the top, $180,000. Okay, enter the amount from, this is our adjusted gross income, 164. Subtract line 3 from line 2, if it's 0 or less stock, you cannot take any of the credit loss fund. 16,000. Enter 20,000 if very filing jointly, 10,000 if single. Alright, if line 4 is equal to or more than line 5, enter 1. That would mean that you're below that threshold. Well, it's not. Less than line 5, divide line 4 by line 5. We already did that, enter the result, 0.8. Multiply line 1, oh whoops. Here's the 1200. Multiply line 1 by this. So 960. Let's see. Multiply line 7 by 0.4. Alright, what's 960 times 3. Enter the amount here and on form 1040, line 29. Alright. So this goes directly on 1040. This is the refundable portion. Let's see, American Opportunity Credit. Goes on line 29. Okay. Alright, then we gotta continue on. Subtract line 8 from line 7. So the difference between those two, 64, what is it? 576? Alright. And the total for all amounts, that's fine. Let's see, after complete part 3, enter the total of all amounts from all parts 3, line 31, if 0, support line 31. Oh, so we don't have any lifetime learning credit, so we're not gonna enter anything there. Smaller of line 10 or 10,000. Multiply line 11 by, what did I do this right? 8 minus 7, okay. Total credit is 960. All amounts from 31. If 0 skip, oh, okay, if 0 skip lines 11 through 17. Enter 0 on line 18 what would have flowed through is that, 576. So enter it here and on Schedule 3, line 3. 3, line 3, here we go, 576. So our $960 credit is divided into two pieces, a refundable portion and a non-refundable portion. Questions? This is what a 1098T looks like. A lot of you probably already know what this looks like because many of you have received one. I don't know that DMAC mails them anymore. I think you would download it off of your account. So payments received would be up in box 1. If there was a scholarship that was received that is included in that box 1, because these payments could be from anywhere, then you would subtract that scholarship because any scholarships that are non-taxable would not be included in that. Anything that's been shielded from tax. Questions?